Hello there, Mavericks. This is Rob Reinhold, and we are well into summer. Hopefully everybody's enjoying the warmer weather. In this session, we're going to be going through the news of the week. We're going to take a look at all the sectors, score them from +3 to -3, and then we're going to find some trades.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, let's start off with what happened last week. Last week, we had 4 days of pretty bad economic news, and we're going to take a look at the economic calendar here in a second. But the market brushed them off. The market just kept going higher. There's a saying in Wall Street called climbing the wall of worry, and actually that's when the biggest and best bull markets happen, is when all of the bears have very legitimate reasons why they're bearish, and yet the market keeps going up. Because the people shorting these kind of markets, they have to buy back in the future, and so you've got all the regular buying coming in, and then you've got all the short covering. These end up being really good markets to be bullish. I know it sounds crazy, but the best bull markets is when people are pessimistic. That's usually when you get the best moves. This week, the tariff drama continues. We had President Trump and President Xi start to talk on the phone to resume trade negotiations. The market really liked that. The market really liked that news. And bonds have just been hanging out in this 4.3 to 4.6 area. The market's really happy about that there's really no crazy things going on in the bond market. Last week, I mentioned earlier, we had some really ugly news here. So let's take a look first at ISM manufacturing. Came in at 48.5, supposed to come in at 49. This is an ugly number. And then we got ISM services. This is 2/3 of the economy. It came out below 50. Below 50 is recessionary. 49.9, it was supposed to be 52. Just a terrible number. Next, we get unemployment claims, which are starting to rise. This is one of the things I've been talking about all the way back in March, how we were supposed to see all these layoffs and we just didn't see them. We're starting to see unemployment claims rise quite a bit. Take a look at all of that bad news. The market was up on the week on Thursday. And then on Friday, we got a really great jobs report. The headline number beat, average hourly earnings beat, and the revisions to the last couple of months were really large to the upside, really calming the market, saying, hey, the employment picture is still doing just fine. This week was a frustrating week for bears. If you were a bear, almost everything went your way and the market still went up. That's a good sign that you are on the wrong side of the market. So let's go in and take a look at the numbers. Let's take a look at the charts. And let's talk about where the market is likely to go from here. Dow up 1%, SP up 1.5%, and look at the Russell. The Russell's really playing some catch up here as they're starting to get going. Gold up 1%, Bitcoin taking a little break. For most assets this week, this was a slightly bullish week. I really want to focus here on the first 4 candles of the week. So again, Monday. Remember, Monday we got the bad ISM number. We closed at the high. Tuesday goes up. Wednesday, we get that ugly, nasty ISM services number. Look at that candle. Look at that candle. Thursday, okay, we had a little bit of selling on Thursday, and that mostly came at the close on Thursday, like the last 30 to 40 minutes, kind of tumbled. And then a gap higher, and you can see that we held on to our gains. It didn't extend the gains, but we held on. One of the things I've been talking about is the seasonality of early June and how early June is typically a smaller period of seasonality movements. It's typically a period where you don't see big moves and big breakouts. And I think Friday's candle is exactly what we're likely to see. We're likely to see these kind of candles where the market does move higher, but not with a ton of momentum. We come over here to the Qs. These are breaking out, but you can see we're not getting these expanded range candles on these breakout and runs. I think this market just continues to creep higher, deeply frustrating the shorts in this market. We take a look at the heat map. You can see large cap tech did really well, except for Tesla. But there's enough green on the board to say this is a broad-based rally. Next week, what am I looking for? I think we keep pushing out of the high base. I think it's going to be incremental. I think it's going to be small, but I do think we are going to clearly push out of this base that we've seen. I do want to make one caveat. If Monday is a big down day, then I will definitely go back to, we're still in a base. We're still in a base. We had a little breakout on Friday and then slammed right back down into it. At that point, I'll be like, okay, we're still in a base. If Monday, Tuesday are higher, then I think you can basically say we have now moved out of the base. The next level is all-time highs, which are about 1.7% higher. And then at that point, we'll probably hit some resistance again and likely break through to the upside at some point. If China and the US come to an agreement on trade, this market is going to go to new all-time highs. I'll say that right here, right now. Most of the markets are range-bound waiting for this to happen. Forex, commodities, they're all just kind of range-bound hanging out here. And I want to keep bringing up, June is typically not a month where you get huge explosive breakouts. So one of the reasons why I think, again, we're just going to creep higher here over the next couple weeks. Next week, we've got core CPI. That's really the only thing on the calendar. That comes out on Wednesday morning. These numbers have been light anyway. I don't think there's going to be any surprises here that we have higher than expected inflation. The market and the economy has softened up a little bit to where we're no longer seeing these, but we'll have to wait and see what happens on Wednesday. We have finally moved from a +2 to a +3. We're finally starting to get some new highs in this market. There's no reason to think that this market is not going to keep going. Now look, my nature is to be a perma-bear. I was a perma-bear from 2002 to 2004 because I just seen the dot-com bubble crash and I thought every time the market went to new highs, it was the biggest joke. It didn't deserve it. There should be much lower prices. And that was where I was stuck. If you and I were to sit down and have a couple drinks and talk about the economy, I would not be very bullish. I don't feel bullish. I don't think it's bullish. I have lots of concerns, but that is my opinion. That's my opinion. In the world of trading, you can't trade your opinion. You have to trade systems. And these charts are screaming at you that this is a +3 market. It's been screaming at you as a +2 market for the last month and a half, and now it's just getting stronger. So that's why I say these are the kind of markets that can really start to run because a lot of people feel like I do, and they're not very convinced of this move. It's called climbing the wall of worry. Let's look at sector performance. All right, so utilities finally took a little bit of a break. Comm services and tech were the best performing sectors, followed by materials and energy. We're going to take a look at all these charts. Materials and energy basically just kind of bounced back from where they were. Healthcare has been underperforming, and you can see it had a decent week, but it was a pretty isolated market to just a few sectors that were super hot this week. Let's move into the individual charts. Here is utilities. We're going to stay at a +2, pull back to the 20-day moving average. Pretty standard here. We've got a nice little trend line developing here. We know we probably didn't make a new swing high there. It still looks overall strong. Communication services has gone from a +2 to a +3. We got a high base breakout here. Everything looks good. It broke out before the market did, showing that it's stronger than the market. Next up, real estate. We're going to just leave that as a 0. Moving averages are flat. No new highs, no new lows. It's a 0. Healthcare gets moved up from a -2 to a -1. It's creeping higher. Take a look at these candles. Long lower shadows. Any selling is being bought, and we're closing up near the highs most of the day. It's telling me that the money is starting to come back into healthcare after being a terrible, terrible place to be for most of this year. It's starting to come back into healthcare. Industrials continue to be one of my favorites. We have now broken out of a high base, +3. It was at a +3. It remains at a +3. Financials, here we are at a +2, slightly better. Once it breaks out, we can go to +3 on those. We have consumer discretionary. Actually had a little bit of a pullback. This is one of the few sectors that the only sector that got a downgrade this week. It was a +2. It's a +1. I'm not too concerned. It is still in this high base pattern, but it is below the 20-day moving average, which is why we got a downgrade here. I don't think this thing is going to become bearish because I think the rest of the market is going to stay fairly bullish. Moving on to consumer staples, you can see we're right at the moving averages. That's a 0. No surprise there. Technology has gone from a +2 to a +3. So an upgrade in tech. You can see it broke out on Wednesday. So it was showing relative strength on Wednesday compared to the rest of the market. Here we have the materials sector. Gone from +1 to a +2. It looks good. It looks fine. It's not running anywhere, but it's just creeping higher. And here we have energy that was a -1. We're going to move that up to a 0. As you can see, it had an up week, but it didn't really change anything on the chart. This is where we were last week, with industrials being the only +3. Well, 2 more sectors have moved into +3. Tech, comm services, industrials look strong. As I said earlier, consumer was the only sector that went down. Materials crept up, and energy and healthcare get bumped up a little bit. This is where we are right now. The market is quite bullish, and you can see the strongest sectors are tech, comm services, industrials, followed by materials, utilities, and financials. There's a lot of places to look for good trades on the bullish side. Let's take a look at our trading slots. If you remember over the last couple weeks as we've been in this space, I've been under-invested, meaning that I haven't had a full boat of trades on. And I've been very clear saying, I don't feel like putting on a whole bunch of new trades. Remember, you can decide how many trades you make, which is how much capital you have in trades at the moment. I don't like to have a lot of capital in trades when the market is consolidating, so I make less trades. We only had 7 trades on, and 2 of these trades rolled off. We actually had a trade in the industrials that was taken off early. One of the few times we take trades off early. JCI reached 80% of its max gain, and there were still more than 2 weeks left on the trade. So that got taken down for not a max gain, but a good gain. And consumer staples, we had a Procter & Gamble butterfly that ended up right at break even on Friday. So 2 trades rolled off, leaving us with 5 trades. We have moved up to a +3 on our market score. That means we're getting more bullish slots and less bearish slots available. Let's take a look at where we stand here. We have 5 trades on. This is where I now want to get more capital into the market. Remember, the past 2 weeks, we've been at like 6 or 7 trades. And I've said on purpose, hey, I want to stay light because the market's not running anywhere. The market's in consolidation. Now the market's breaking out. I want to get more capital in. I want to get more aggressive. I want to get more on the bullish side. So as you can see, I'm going to add 5, +2 in comm services, a +2 in tech, a +3 in the industrials, since we just had that JCI trade roll off. I'm going to do a +1 in financials and a neutral in comm services. As you can see, this is now going to move me from slightly bullish to actually quite bullish in this market. I'm doing this because now the market is breaking out of a high base. I want to get more bullishness on the line. Let's go ahead and look in those sectors and see if we can find some possible trades. In the comm services sector, here we have Tencent Music, TME. This is a Chinese Spotify, basically. And you can see it's done fantastic. Had a great earnings report, had 2 big expanded range candles. We went sideways for 7 or 8 days. We broke out, we pulled back, we held that level. And you can see we are basing now up here. I love this Friday candle. I love these kind of candles. It's a bullish engulfing candle at the top of a high base. Whatever happened this morning, I don't know what it was. Some news came out. It gapped down. Everyone rushed in to buy it. And by the end of the day, we closed up on the day and at the high of the day. This candle is just a beautiful, beautiful candle. I think we're going to get a breakout here in the next couple of days. So how looking to play it? I want to be bullish. I've already decided I'm going to do a +2. So this is my trade here. It's going to be the 18-19 bull call spread. So basically, I'm calling for a breakout. If it doesn't break out and run, this is going to be a loss. This is a highly directional trade. If I get the move, it's going to pay off with risk reward. If I don't get the move, then this is going to be a max loss. Moving on to the industrials, this is the sector I want to be the most bullish. There were two stocks that I was debating over. One is called Archer Aviation that looks really good. If you're an Elliott Wave person, it's having a nice ABC pullback and had a nice bounce on Friday. I decided to go with this one because it has a little bit more upside, because look at this one on the chart. I want to go a little bit further back to show you where this one was trading just a few months ago, all the way up to 22. Had this big move lower. You can see bottomed out around 5 or 6, and here we are at 12. This is a mover. Remember, when you're doing a +3 trade, you don't want to do it on Walmart. You want a mover. You want something that can have an explosive move higher because you're making a bet. This trade is going to move in your direction during your time frame. You want something that has some power behind it. As you can see, if we break out of this 14 level, we've got clear sailing probably up to about 18 before we hit some resistance, and ultimately, somewhere up at the 22 level. Very, very bullish if we get going here. If this market breaks out, we break out to new highs, there's a deal done, this thing should do very, very well. I'm going with this one. A +3, I've already decided. I'm going with the June 27th, 12.15. And that's going to get me to the delta I want. I could absolutely go higher. If I wanted to go even higher than 15, I would just go with the straight long calls and probably go out to the July monthlies to give me some time so I'm not sitting in that time decay. And with the target up at 18, that would be where I would look to exit. A couple of months ago, I did some research on this company. It's a fun little company. They do DoorDash delivery, but it's these little robots that look like baby strollers that they put the food inside, and then it rolls down the sidewalk on the street and delivers your food to you. A little side note here, pretty cool thing to take a look at. Next up, financials. Schwab. Now, financials, I was only wanting to be a +1. That means I'm looking for a different kind of stock chart. I don't want to get into a serve kind of a stock chart. I don't need it to go up 10, 15, 20, 30, 40%. I just want it to not go down. Here is a really nice trade of just something that had a lot of buying. Take a look at this institutional buying. This is just straight institutional buying for a month. Had a little pullback, it bounced, and you can see we're just holding. We're holding in this area. After a big move like this, you could assume that there is going to be a holding period until it can get going again. I'm looking to do a +1 trade, so I don't need it to get going again. I just need it to not go down. If you want to do a pure +1 trade, it's going to be the 85.88. 85.88, so you're basically saying, I don't think it's going to go below where it is here, or at least not until June 13th. I'm going to be doing this one here. I want to be a little bit more bullish. I think the market's going to be pretty bullish, so I'm going to be a little bit more bullish. The 87.89 bull call spread. As you can see, I don't really need it to break out and run. I just need it to creep up higher, which is exactly what I think the market is likely to do. Moving up next to consumer staples. This is a zero trade. I wanted to do a sideways trade, so I go and find the stock that fits what I'm looking to do. This is Target, and you can see Target has been very, very sideways after a big earnings miss a couple of months ago. The only question is, where's your midpoint? What's your time frame and what's your midpoint? And that's really what you have to decide on this butterfly. Where do you think it's going to be? I'm going to be doing a June 20th. I've got a lot expiring on June 13th, so I don't want to add to that. If I was doing June 13th, I would do basically right where it is, 98. So the 95, 98, 101. Just be pretty much truly a zero. I'm going to be 2 weeks out, so I want to be slightly bullish. I do think the market's going to creep higher, pushing most stocks higher. So I'm looking to be out to the 95, 100, 105, or maybe even the 96, 100, 104. I want my profit area to be right in here. Just slightly bullish, let it move up into this area. That would make a really nice trade here. Making it a slightly bullish butterfly. I put plus 0.5 on that one. And last, moving into technology. Technology was a +2, so again, I want something that's going to move. This thing is a big mover. This is QBTS or D-Wave Quantum. This is a quantum computing stock. They've been very, very hot lately. Run up, base, run, pullback. So you can see we're just chopping around in this area. We're holding this area after this big run. Again, you would expect you had about a 3-week run. You're probably going to get about a 3-week consolidation. This candle on Friday, big candle, 13% candle. This thing's a mover. We have no idea if and when it's going to break that 19.5 level. But as long as we give ourselves enough time, I'm going out to the June 27th, 1821. As long as we give it enough time, we should see a move higher if this market moves to new all-time highs. If the market doesn't and something happens in between, then pretty much all of our bullish trades are probably going to suffer and struggle. But if we get that bullish move, these kind of stocks, when we go from +2 to +3, they're really intensifying the buying of these speculative names. People are no longer buying the safe stuff. They're looking to buy the speculative stuff, and this is one of the most speculative trades out there at the moment. Let's wrap this up. This high base breakout is happening. One caveat I said earlier, if we have a big down day on Monday, then we're just back in the base. We're back in the base, and all that bullishness I talked about is just delayed a little bit. Just delayed. Do not fight the trend. I know some of you are bearish. I could hang out with you and we could talk about how bearish we are and how the economy is not all that great and how the market's getting ahead of itself. We could absolutely talk about all that stuff. But guess what? That's cocktail talk. You don't trade your cocktail talk. You don't trade your opinion. You trade the charts. The charts are screaming at you to get more bullish now. I know you probably feel less likely to get bullish, but the charts are screaming at you. Here's what I've learned over my 27 years doing this. The market's right. The few times that I have been counter-trend to the market and I've been right, yes, it helps my ego. It makes me feel good about it. Most of the time, the market has steamrolled me, in my opinion. So don't fight the trend. Everyone have a great weekend, and we will see you next week. Goodbye, everyone.